Hey guys, so I want to go over some common patterns today. There are two main types of patterns. There are continuation patterns and there are reversal patterns. So what I've shown on screen, these green lines indicate the price movement. And these are some common patterns for continuation. So there are some different names that these go by, and I'm going to use white to show you how you would chart them on a charting system, kind of like Coinigy, as I'm using here, TradingView, or you can even use it on Bitrex, or not Poloniex, but Bitrex. So this first one here is most commonly referred to as a pennant. And what a pennant is essentially a triangle where you have descending highs and descending highs and ascending lows. So price is converging together. Now, the important thing to look at here is this is a bull pennant because we have the flagstaff of this pennant here in a bull move. Now, if this flagstaff was down here and you had a pennant that looked like this is still a continuation pattern, but we're in a bull move, so the next step would go down. So you'll see it bounce around and have a pretty consistent coverage, a pretty consistent line from the lows and the highs that converge together, where the market stabilizes at a price point that they accept and ultimately continues its trend. A very similar version of this. This is also technically a pendant, but it's more so referred to as an ascending triangle. So you still have that triangle formation, but this one has stationary top. You don't really pass, you can pass it with a couple wicks, but it should be very consistent. And then you have an ascending low, and ultimately you will break out top. Same goes for this one. If the flagstaff here is going downward and then you get this formation, then it's a continuation downward. The next possibility is what's called a flag or a wedge, when it's a little more uneven, because you could have, just like with these triangles here, you could have lows that kind of come out, and this would form a wedge because it's uneven on one side, kind of like a wedge. But this one is more of a flag, and same thing, it goes down to a point, and that point at which it stops, you can use other indicators to kind of determine the point at which it'll stop. Some people go off of volume, some people go off of fib levels, some people go off patterns here like ABCD. If this formed a valid ABCD pattern, which I have a video on, then this would signal a reversal at this point upward. The next version is a very defined flag, which can be completely straight. This is a very, very straight flag. The wedge, of course, I guess I'll make this one a wedge. Wedge could look more like this. And it would still signal. An opening wedge like this is going to be a little shaky. What you should be looking more towards is a wedge that starts wide. Let me show you a better indication of this. There you go, that's more of a wedge. Boom. You get the picture. What you're ultimately looking for in these patterns is you want price to consolidate, and you want it to come together and find a stabilized point. So what these are essentially saying conceptually is that we've had a rise, we've made a new high, or maybe not even a new high, but we've had a swing low and swing high, and now price is kind of retracing and rising again and retracing, and it's going up and down to find its new supported level before continuing its overall trend. And this is essentially what happens in all of them. Now, your next move is generally a good place to put your targets, is the height of the flagstaff. So if this is my entry here, it doesn't necessarily need to be the entry, but your next target would be up here, just the height of the flagstaff. This one right here is a cup and handle. And a cup and handle is, it just looks exactly like this. What you're looking for is a nice teacup shape, like this, and you're looking for a handle to come back down. And generally this handle will come to like the 3/8 retrace level. It could come down all the way to the 6/1/8, but it gets a little bit wavering down at the 6/1/8. With this particular pattern, you want to look for increased volume at the handle. You want increased volume at the handle of your cup and handle to give you a better indication that it is going to continue going upward after this bear move. Now this indicator this pattern specifically does work more often than not on longer time frames. We're talking an hour plus for your candles, whereas these flags and pennants, wedges, these will work on pretty much anything above 5 minutes. 5 minutes are going to give you less consistent results. 15 minutes, they're going to work very well. And then obviously everything after that would be even more solidified. Now remember that if these are flipped, it does work downward as well. So pay attention to where your flag staff is, or your pennant staff, because like we could have an upward move, but if you see something like this where it doesn't come all the way back down, and then you start seeing price move here like this, even though this price that we're currently at is above our previous low, you need to pay attention to this flag staff here, because, I'm sorry I flipped the colors on you here, but this triangle or pennant right here, because the flag staff is bearish, your continuation is likely going to be bearish out of the formation here. So keep that in mind. Pay attention to your staff. Now we also have reversals. These are common reversals. So the first one here is called a head and shoulders, and we have a cool tool within the Coinigy platform and the TradingView platform that lets you map this out. So what you're looking for here are you're looking for a left shoulder, a head, and a right shoulder, where the left and the right shoulder are about equal height and they have about equal lows, and the head is higher than both. Now you can plot this on your chart by using the head and shoulders tool, and it will give you this nice little diagram. And what this diagram is showing you, the important part of a head and shoulders is that the bottom of your head and shoulders pattern is called the neckline. Now the neckline is what you want to pay attention to, because as price is moving here and completing the head and shoulders, if we break below the neckline, it is considered a full formation. But let's say we came here and then we bounced off this way. This would break the head and shoulders here. This would not be completed because we did not break through the neckline, and price will continue on its upward movement and not reverse unless we come down and break the neckline. The next one you'll see all over the place. Excuse me. It is simply a double top. It looks like an M. If you see an M, know that at this point right here, at the second top, it's very likely to go down, and it will generally go down to at least the middle of the M. More often than not, it'll go down the initial move of the first leg of your M. Also works in reverse. So if you're on a bearish trend and you get a double bottom, something like this, you're likely going to go up at this point right in here. The next reversal is an ABCD pattern. ABCDs I have a video explaining because they're a little bit harder to explain in a short period of time. But essentially you're looking for some very specific retracement levels in your moves. Now this little green blob, this isn't an accurate representation of an ABCD in terms of the exact fibs that are here. But again, refer to my other video. I go pretty in depth on how to spot those. But that is a reversal at the point up at the top here, which is your D point. and you'll move down from there, at least for a little bit. So look out for these. These are very useful when combined with fibs, when combined with volume indicators. You're going to see these everywhere. So these are the main things you want to look for. That'll help you a lot in your trading to kind of determine if something's going to keep testing new highs, if something's going to, if it's just reversed, is it going to keep going up after a long bear trend? These are going to be extremely helpful to you, and eventually you'll be able to see them without even charting them. So let me know if you have any questions, and good luck trading, guys.